Is this it? Is this the shift that we've all been waiting for? Because right now, it seems as if buyers have the upper hand and sellers, they are sweating hard right now. So what's happening here? In April 2025 of this year, home prices started to cool down and we saw an influx of inventory and just not enough demand out there to absorb that inventory. And once that happened, we started to see this trend across the nation where sellers finally, after a very long time, started to offer concessions. We're talking about price cuts, we're talking about cash at closing, 2-1 buy downs, free appliances, and much more. Why this shift now? Well, right before the elections, the sentiment started to change that the market and the economy would improve, and a lot of buyers had hope that the Fed would come in and cut rates, and a lot of sellers that were on the fence also had hopes when the rates would come down, they would be able to put their home on the market and buy that next home they're looking to buy, either a downgrade or an upgrade. Especially for the retired folks, they're looking to downgrade, right? But the opposite kind of happened where the rates stayed where they're at. And as a matter of fact, the rates actually went up a little bit. And then we started hearing news about tariffs. So both of those points affected both supply and demand. It affected supply by fear, because a lot of sellers started to fear, hey, if all this chaos is happening in the market, am I really going to be able to reap the benefit of my home and take the equity from my home that I made on the home over the years? Or is the market going to crash in the near future? So a lot of sellers started to put their homes on the market. And then what you saw is a lot of buyers just sit back because they're like, hey, the rates have gone up. They haven't really improved. There's all this chaos happening. I'm just going to sit tight. So more inventory came on the market and there was just not enough demand out there to absorb that inventory. And that's what we're seeing happening right now. So let's talk inventory. Right now, listings are up 20% year over year, but still 25% below normal. And there's about 500,000 homes for sale around the country. Redfin's predicting that by year end, we may see a 1% drop in overall prices around the country. Now, can we agree that that's not a market crash and more of a market shift? Now let's zoom out and look at the commercial real estate front. Office defaults are up 31% and vacancy rates just hit 19%, the highest in US history. We're literally tearing down more office buildings than we're building, the first time in 25 years. All right, now let's break this down according to who you are. For my buyers right now, well, patience has finally paid off. You've went through bidding wars and crazy rates, and now you're finally starting to see more options in the housing market. For my sellers, the game has just changed. If your home is on the market right now and it's not priced correctly or it lacks upgrades, expect your home to sit on the market for a while. And if you are a commercial investor holding on to properties that are office space or retail heavy, now is really not the time to be on autopilot, because a lot of these mortgages are coming due, with a lot of these properties having vacancies. For everyone watching the Fed, here's the curveball. Job openings just ticked up by 7.4 million in April, which was a little bit higher than the month prior. So that's a good sign. We're starting to see inflation slowing down, but the economy still has some heat. As a matter of fact, today, President Trump went on Twitter like he always does, and he demanded Chairman Powell to drop the rates. But I don't think that's going to happen because the Fed hasn't blinked yet on the rate cuts discussion. And here's the big takeaway that most people miss. Real estate is a local game. While your zip code might be on fire, the next county might be ice cold. National trends give you clues, but never the whole story. So that being said, I'm gonna jump into a local market here to give you guys some perspective. What's happening here in the East Bay area in Northern California in the city of Fremont. We're gonna look at the month of April and compare it to the month of April prior year. We're particularly looking at single family detached homes. So let's get on the board. So looking at the market report here, when we look at the month of April 2025 this year in Fremont, we're looking at active homes right now, 115 homes active. The same time last year, only 52 homes were active. That's almost more than double the inventory this year. 63 homes pending from that inventory. and 70 homes were pending last year. So more homes pending last year, but less homes were available. So the absorption rate definitely this year is less, which goes to my next point, which is the monthly supply. We have about 1.8 months of supply this year. The same time last year, we didn't even have a month of supply, only 0.7 months of supply. Another number here, average days on market, 11 days this year and only 8 days last year. So homes are selling, but last year homes were selling quicker. Here's another one here, average sales price. Last year, average sales price was $2,055,000. This year, average sales price is $1,917,000. A little bit of a delta there, but definitely it's a sign that the market is cooling down. Now we're looking at sales price versus list price. This is a number that shows you what the property is listed for and what it sells for. Last year, when you listed your home, it sold about 12% higher. That's why you have a 112% number there. This year, sales price versus list price, it's at 106%. If you are active in your local real estate market right now, either looking to buy or sell or invest in residential or commercial real estate, it's very important you know your local numbers. So connect with your local folks or watch videos that give you local data, because local data is very important for your decisions. I really want to hear from you. Are the prices dropping in the area that you live in, or is your market still in seller mode? Drop your city in the comments below and tell me what's really happening in your market. Because let's be real, Zillow data is not always correct. So let's crowdsource and make this real-time real estate map by talking to each other. And if you got value from this, hit like, subscribe, and share this with someone who's looking to buy or sell soon. We're not in a crash. The market is correcting right now. And a lot of smart buyers and investors are moving differently because currently the leverage has shifted. That's all I have for today, guys. Until next time, this is Karan Singh.